FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
And we are back on the Financial Survival Network. You're listening to Kerry Lutz. Hey, we warned you about 6 weeks ago when we had the person you're about to hear from on. There is an emerging credit crisis taking place. How it's going to metastasize, how it's going to affect you, that remains yet to be seen. Talking about Gordon T. Long, market research, analytics. His work is impeccable. His command of facts and research, it doesn't get any better. Gordon, welcome back.
Thank you very much, Kerry. Very flattering. You called me a wonk, and I appreciate it. That actually.
Well, I mean, a wonk who can relate to the average person, who can really put it effectively into words. And, you know, we talked about this, I think it was about 4, 5, 6 weeks ago with subprime world. We got the auto bubble, you know, the subprime auto bubble, and they're securitizing this crap, Gordon, and sloughing it off on pension funds and Joe's six-pack and, you know, obviously the college bubble, everybody knows about that. But the subprime auto loan thing, a lot of people didn't know about it. And now we're seeing this subprime bubble hitting again, and it's going to pop. So I guess the Fed's just going to start buying car loans now. Is that what's going to happen?
They're going to have to do something because, you know, we sold 16.4 million cars. We haven't sold that many since 2006, yet the real disposable income shrinking.
Yeah,
and if you look at all those car loans, they're being sold in subprime zip codes. And now we're seeing the non-performing loans coming together. And Kerry, you're absolutely correct. This is the same old playbook from 2008. We called it mortgages. We repackaged them all, made them AAA, if you would. We got some different terminologies today called collateralized transformations versus credit default swaps. It's the same gig, but they're being passed off to pension plans, et cetera, who are desperate for yield. And what happened in 2008? People couldn't pay mortgages, and all of us and asset values fell. And you're seeing the same in cars, and all these cars are being leased, and the residual values of these leases are now in question because there's just look at the auctions. There's cars as far as the eye can see. So what'll scare them is when they see the defaults, and they're starting to happen. Student loans, we know that's a subprime market, and it's packaged the same way. Sallie Mae packages them through collateralized loan obligations, which go into the shadow banking system. But there's more than that. So this whole shadow banking system, which is, you know, borrow short and lend long, works until there's a bit of fear. And then all of a sudden, as we saw in 2008, it was asset-backed commercial paper that seized up. Today, it's about repos. And now we're finding failures regularly at high rates within the repo market, which is the short-term borrowing, a facility that's used as collateral. To the extent, Kerry, that the Federal Reserve has actually hit stealth-wise close to $300 billion in reverse repos. That is pushing out some of those treasuries to cover some of these shortcomings and pulling in cash. And I believe they're also doing that so that they got a reserve when the market sells off to be able to pump $300 billion back into the market. So everybody's getting nervous, but the gig will go on.
Well, it's just remarkable to me that we learned absolutely nothing. You know,
not a thing.
A car loan, you know, granted, you will get, it's easier to repo a car. You get those guys on South Beach towing or whatever, you know, you basically get these questionable characters go out and grab the car, and then they auction it off, and you don't take as big a hit. You know, it's easier to sell the collateral off, but you can take a big hit when your residual, which is the amount of the prediction of the value of the car at the end of the finance term or the lease term. And when it's off by a substantial amount, which they can be because you don't know, all it is a guess. Sometimes they're spot on, Gordon, but, you know, like anything else, sometimes they're not because it's a prediction of an event yet to take place. And just like your chart in the, your astrological chart in the newspaper, sometimes it's there and sometimes it's not, although this is scientifically based and a little bit more factual based, but it still is a prediction, right?
Precisely, but you can put some facts around some of this, Kerry. These cars that are being returned, and they're used cars coming off lease, who's going to buy them. Because people right now, you're incented to buy new cars because the amount of money down that you have to put in, the monthly payments with some limitations, but the amount of cars that you can get at the auctions now that are used are just stunning, and they're not getting those residual values. They're not there. Now, one of the reasons that they're not falling off, and I see this front and center. And by the way, towing companies around here aren't called towing companies anymore up in the Northeast. They're called towing and recovery. Have you noticed that?
Yeah. Whole new market.
It's a new market. And they're not the little tow trucks that you and I grew up. They're platforms so that you don't have to rotate the wheels. And I see every morning on my run at the donut shop where I do a turnaround, they're all coming in. They've been working all night. So we're in the recovery business. But these used cars, the problem is, and I talked to, my local garage here about business and how bad it is. And, and all they're doing is doing work for recalls. But people can't afford a used car. And you say, pardon? Because the maintenance bills for just simple things are $500, $800 and more. So who's got that kind of money in a budget? So people rationalize they can get a car for $199, $200 a month. The costs are fixed. And the money down is substantially less, but now they're limited on miles. So that's what's going on with people driving new cars, maybe not marquee cars, but new cars. But suddenly all of that 16 million cars that are being sold right now and were sold previous years are now coming back. And who's buying them? Mm-hmm. The garage is just because there's it's part of it's the modules now in these cars. You don't tinker with something, you just replace a whole module, and it's a large module. So they're $500 or $1,000. That's what I'm seeing. So that's going to be an adjustment process. That's what's coming.
Well, we need another cash for clunkers program to get rid of them. Right? That was effective. Got rid of millions of perfectly good cars. So it took them out of the market. Right, Gordon?
Exactly. But this credit is steadily imploding. I'm seeing it as we talked this morning, specifically in high yield bonds, high yield credit, which there's been no spread. And it has now dramatically diverged from the S&P and has been accelerating. That's risk coming off the table. So more and more money is now becoming risk adverse. And so that's a little scary. Now, I quickly need to say, Kerry, that the headwind of the buying is so significant that it's being able to absorb this. And this is because of something you and I were talking about earlier. There's a $2 trillion buyback gig going on the market where corporations are able to buy back their shares basically tax-free or using tax money to do it. And they can't buy them fast enough. So you've got them buying, you've got central banks from Denmark, Norway, Switzerland, China, Japan buying shares. You've got 400 public-owned trusts and sovereign wealth fund buying shares. Why? We need to beg the question. You got Japan. You got the Bank of Japan and the biggest pension plan in the world, which is the Japanese pension plan, now being instructed to buy the Nikkei stock market as Shinzo Abe's policy. Those are pretty heavy headwinds. And also, it's shares that are withdrawn because from the market, they're not traded. So there's small trading volumes can generate some fairly big moves. So it's such a distorted market. It's not for the faint of heart anymore, Kerry.
Yeah, and this isn't going to end well because eventually, like Lady Thatcher said, you run out of other people's money here. And these funds, I guess the central banks in theory can never run out of money, huh?
No, they can, and they will keep printing it in various forms. Forget paper. We will continue, and we must continue to generate liquidity. We don't have a capitalist system where you have savings that goes into investment. What we have is credit that's used for consumption. And once you get on that treadmill and you move from sound money, there's nobody's ever returned from it. So it inevitably plays out. But Kerry, don't ever for a moment, underestimate politician and central bankers' creativity. So as bad as some of these points I'm making, they've still got a lot of tools and creative things that they can do. Right now, I think they're very concerned, but they haven't reached the stage of panic. And when they get to the stage of panic, and it'll come, the kinds of things then that you'll see will astound you, like they are right now, astounding you that you're seeing.
Yeah.
I say that because I was just reading earlier this morning that they're going to put limits on money market funds now, that you're going to be penalized if you break the buck and to take it out. They're also looking at, bail-in laws now that the depositors will lose their money. So if you're in a money market fund today, you're almost guaranteed to have confiscation in the future.
Wow. And where does that leave you? So where do you put your money?
Hard assets, unencumbered hard assets. To me, Kerry, the issue today is the store of value, and where can you store it? And traditionally, you look at gold, you look at silver, which I'm a big proponent of, but I believe the government's going to quickly start taxing that, and land has been a good one, but those are pretty evident ways, and I think a lot of people have been pretty hard on that for 5 to 8 years now. The people that really understand the magnitude of the problem. Where value can be stored today, in my mind, is in discounted, unencumbered free cash flow. So corporations do not have free cash flow. They're burning at a phenomenal rate. So even those securities are questionable on an enterprise value basis. So you need to find entities that in tough time will generate a free cash flow. And they may not necessarily be securities that are trading on the stock market, if that makes any sense to you. So you need to find where those are. They're out there. But I'll tell you, they're not on the front lips of your security analyst or your broker who calls you.
All right. And we will talk about that when we come back on the Financial Survival Network.
FSN Radio. It's all about what's next.
Urgent alert. Ex-Secret Service agent claims it's worse than people know. One of Obama's former Secret Service agents recently smelled a rat. What he discovered inside our government was so devastating, he only saw one option. He quit. What's worse, he fears what he found could affect your job, your neighborhood, and most importantly, your family, very soon. It's worse than people know, he said in a recent interview, and I'm not trying to scare you either. We too share his concerns. This is why we've devoted the better part of 3 years collecting solutions for nearly all problems created by intrusive governments, and we've succeeded. Go to hiddensecrets1.info to check out all the details. Our panel of insiders have devised a legal but sneaky set of solutions to help you reclaim your privacy from the NSA, opt out of Obamacare, and make a bundle from little-known investments and small business opportunities. Simply visit hiddensecrets1.info. That's hiddensecrets1.info.
FSN Radio.
When your accountant wants tax-free income, this is what he does. Accountants know the law. They also know that any American could legally get paid up to 3 times per month, 100% tax-free. That's 36 tax-free checks each year. It doesn't matter what you make already. This simple strategy could work for anyone. Go to www.irsrevenge2.com to learn how. That's irsrevenge2.com.
The Financial Survival Network. It's all about what's next.
We're back. We're speaking with Gordon T. Long and cash flow, pure, unabated, free cash flow. First, define it for us, Gordon, and then tell us where we find it.
Well, it's EBITDA, earnings before interest, taxes, depreciation, and amortization. So it's cash that is not encumbered, that you've actually generated. All the cash that the corporations, for example, today have tremendous amounts of cash, but it came from either borrowing the cash because their money's so cheap, or they've actually been generating a lot of free cash. Up until recently, they're not generating that free cash anymore because sales themselves, the top line is falling off. And that's how you do enterprise value. So, how do you find these companies that are generating free cash flow? Well, there are very few of them that are sustainable that I can see in the S&P 500 if we were to have any kind of continued slowing economic growth. There are all sorts of them that are out there in the small end of the business. I'll call them the mom and pop shops. The small businesses that nobody's interested in. Dad started that business. He grew it or maybe inherited it. Nice size business. Got a nice niche that nobody has paid much attention to. It may be a little dirty business. The kids have went off and went to some fine Ivy League school. They don't want to go part of that business. It's get their hands dirty. They're not interested in that. They may be lawyers or whatever, at one thing or another. Father wants to retire. How does he get out from under this small business? He's kicking off phenomenal cash, but he can't do it any longer. He can't turn it over to somebody because the banks won't lend the money to the person who's capable of it because he hasn't graduated from a fine Ivy League school. Am I making sense there, Kerry?
Absolutely. So smaller businesses that the owner, for whatever reason, is looking to basically part company with.
Well, he's got no choice. He's trying to do the kids themselves can't even agree They need money today, pay mortgages. So the 3 kids, if he has them, want to break up the company. So he's in a difficult mode. And these kinds of companies are on sale. But now the bank doesn't want to lend any money to them. So there's players that can come in and play that. They're there. They're everywhere. Matter of fact, you've got 75 million baby boomers of the great generation that are now retiring. And these are the ones that built America. These are the ones that built small business America. And they built very, very profitable small businesses. And you're seeing the mergers and acquisition wave happening. It gets a lot of press, Kerry, at the large corporations. Rupert Murdoch trying to buy Time Warners, a GE trying to buy Alliston, Microsoft taking over Nokia. But that's the real action is down at the low end where, an intermediate-sized company is now acquiring a lot of these mom-and-pop shops because they see what I'm seeing. Right. And that's where the leverage is in America. That's where the real consolidation is going on.
Interesting. Yeah, well, it makes a lot of sense. And you can invest locally, too, which is better for your community. Keep the money in your community, right? It
is. And that's actually a really powerful theme today. People are going local. They're moving and where they can touch and feel the assets, where they can see the service and how it's being delivered. Now, what's that mean to the average investor? Well, it means you got to look around your local community. They're there. The investments are there.
Where do you think the best place to find them is, Gordon?
In what way? What kind of tools or business?
Yeah, tools to find them.
I think the best tool to use is your own eyes. By just really paying attention to what people are doing in your neighborhood, in your community, in your area, and you'll start to see where the opportunities are. People are starting businesses, not just existing business, but starting new businesses. And it's amazing the kinds of things that they're doing. And they need capital. And if you've got capital and you're willing to invest in a system, that you can pull out some fairly recession-proof industries. And I got to really stress that. They need to be relatively recession-proof so that when economies get tough, they're able to sustain it. So they have to be oriented towards real tangible needs of people.
Needs, not wants, right?
Big difference. Huge difference. Because, wants are finance. Needs are you pay for with cash.
Hey, I'll give you a great example. There's a guy who's got a farm, organic farm in Fort Lauderdale, right by 95. You'd never think there was a farm right there. And this guy is cleaning clock and probably could use some capital to expand. He's selling to high-end restaurants in the Fort Lauderdale, Miami, Palm Beach market that, that are known for high-quality food, that only do organic, and, unbelievable business the guy's got. Mm-hmm. Unbelievable. And, he's just built it out of nothing. And who would think? Urban farm in the middle of Fort Lauderdale next to a major highway, no less, right?
Yep. Yeah. I stumble over these opportunities all the time. I'm a sailor up and down the East Coast, and every place I go into, I see so many little businesses like that are, I'll call them dirty businesses, but they sure are profitable.
Yeah. I'm sure.
And Dad's got an old beat-up pickup truck he's still running the business from that are throwing off tremendous cash and are well protected. A big moats around them, if I can use that, as barriers to entry because of the contacts they have, the tradition and the heritage that they've had for doing this for years, and everybody else doesn't want any part of that type of business.
Yeah, and other reasons, yeah.
This is the essence of America, Kerry. This is what built this country. It isn't the big corporations. And by the way, for those who like to stay in that particular bailiwick, these big corporations are desperate for growth right now. And it's my opinion that you're going to see a continued massive mergers and acquisition as these guys chase growth because they can't get it organically, and they're going to chase it with free money and tax-free money. So we're at the beginnings of huge numbers of my assessment of mergers and acquisitions. And if you're skilled at that, of identifying who would merge and what players will go after somebody else, there's going to be some significant advantages there. That's a tough game to play, though.
Yeah. Yep. It definitely is. And it's cutthroat. And, Yeah, like 1 out of every 100 deals that you bring to these guys actually goes through, you know?
But if you look at this deal that Rupert Murdoch's taking over, going after Time Warner, and his arch enemy has always been Ted Turner, and Ted Turner was really, really clear when he was running CNN about running a business, and it reflects today, Kerry, the attitude and this whole M&A, and Ted Turner's comments, and at least that I had read, was that he said, look, it's like Rockefeller. You need to own everything from the oil refinery all the way through to the gas stations, everything in between. Now, that's called a monopoly. But until the government breaks it up, you can make a lot of money. He said the gig is up when they break it up. And so what's happening is with even Rupert Murdoch taking over, going in with Time Warner and the assets, there are some complete monopolies in here. Look at the recent Comcast takeovers. Now, typically, we've been very aggressive with the Anti-Combines Act to come in and break up monopolies. Well, our regulatory agencies today are, at best, I'll say, are asleep at the switch. But I would maybe say that corporations are doing a superb job of using regulatories as a competitive advantage. Yeah. So you're going to see them, call it corporate or lobbying. Let's use a nice, polite word. But they're using that as an MBA strategy today to be able to protect, as Warren Buffett says, the moat around their franchise. And it's by creating that moat, and then these franchises, they can protect margins because they can't protect the top line, it's shrinking. They can't do much more with the bottom line. They're going after margins. They're going after, I'm going to use this word, I'm not going to use monopoly. I'm going to back off that. They're going after market spaces where they can have big market share and command premiums on price. And they're betting that the governments are going to sleep.
Yep. And so far, it's been a pretty good, safe bet.
I'll take that bet.
Yeah, that's for sure. And yeah, I think it's pretty safe, and I think there's opportunity there for you, and you just have to reorient your thinking. Hey, Gordon, just tell us where we find you, where we read your work, because it's been pretty prescient so far.
I'm a couple of places, Kerry. Thank you very much. GordonTLong.com. I have a YouTube channel, Macro Analytics, where we talk about all of this. And we just launched another site called FinancialRepressionAuthority.com, where, Kerry, you'd be interested, where there's so many regulatory changes going on below the surface to be able to really force real interest rates down, and the problems and the unintended consequences associated with all of this monetary malpractice, that the materials are so overwhelming that we actually had to go to a dedicated site, and we're having troubles keeping up with it.
Wow, so amazing!
But until you focus on it, Kerry, we didn't even notice how much it was.
Incredible.
It is.
Well, hey, make sure you go over to financialsurvivalnetwork.com, sign up for our newsletter. You sign up now, and between the end of the month, we'll send you the first 5 chapters of our book. Forget Wall Street, go for the gold and silver too. And I think I'm going to update that book, Gordon, and put in these local investing options and privately held companies, because I totally agree with you on that. And Gordon, we will talk with you again soon. You be well.
All the best. Thanks, Kerry.
FSN Radio. It's all about what's next. Go to FinancialSurvivalNetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.